Hello, chart watchers. Welcome to your Daily 5. My name is Erin Swenlin from DecisionPoint.com, and I'm going to show you the 5 charts that I'm going to be watching very closely this week. So let's get it started. I do want to let everybody know that I have a free trading room on Mondays at noon Eastern. All you need to do is go to my website. You'll see this ad right here and click on it and you can register. It is recurring. Register once and you can be there every week on Mondays, or you'll get the recording later. So come check me out over there. So let's get started. Here is our 5-month candlestick chart of the SPY. I didn't put SPY in here, but that's okay. Okay, so here we have that 5-month candlestick, and clearly a great trading day today. I was telling my producer that I was very sad that I didn't get up even earlier so that I could start trading because I knew this was going to happen. On Thursday, you can see we had the breakout to the upside from this rising wedge. Now, rising wedge is a bullish pattern, but we had the breakout to the top of it. Typically, when you get a bullish outcome to a bearish pattern, it's especially bullish. So I found that breakout especially bullish right here. And sure enough, that was your little, this is going to be our breakaway gap. And the understanding from here on out would be that we'll see even higher prices. Now, I wasn't just looking at this from the breakout from the bearish rising wedge, the upside resolution. I was also paying attention to quite a few other indicators that were telling me that we should see a continuation. Now, there were a few problems when I did my weekly wrap on Thursday with Carl, my father. And those were, so this is on this chart, these are the 2 negatives that I saw on Thursday. Number 1 would have been this negative divergence with the OBV. Now, it's a negative divergence in that we hit new all-time highs. Granted, we do not have this final top. So that negative divergence can really disintegrate. But we want to take a snapshot in time, and that snapshot, we typically don't take a snapshot and then measure those indicators. But in this case with SPY, because we hit new all-time highs, we wanted to make that comparison on the on-balance volume because we wanted to see what volume was so far after this breakout to new all-time highs. And you can see that the previous breakout to new all-time highs also carried a negative divergence. Now, it didn't turn out to be that big of a problem, obviously, but this was something that we were looking at as a bearish possibility to what would happen this week. But like I said, there were too many things on my charts that looked too good. One was this PMO buy signal, and that came in the previous week. Now, I'm going to show you the Swenlin trading oscillators because they are looking very bullish. They were looking very bullish on April 1st. We update these indicators at the end of the market day. So these are as of last Thursday. And you can see that beautiful breakout to new all-time highs. But what were my Swenlin trading oscillators and the other indicators telling me? Besides that PMO buy signal that I showed you, we had rising Swenlin trading oscillators. These oscillators are uncanny in the way that they can tell you, we don't read a crystal ball, so they don't tell me the future necessarily, but they really give me a good indication of what's going to happen as far as tops and bottoms go. And in this case, we had pretty much near-term oversold conditions here with the Swenlin trading oscillators when they did turn around, but they've continued to rise. And rising Swenlin trading oscillators that are not overbought yet are very bullish. And so we should expect a continuation. So when I looked at these on Thursday, I saw some negative divergences going on here, but like I said, we don't have a top at the end, so it's not an official negative divergence, if you will. But we did have these rising indicators, and they are short term, and they are telling us that we should expect higher prices. Notice also the increase in participation here. We had a nice bump here on the percent of stocks in the S&P above their 20-day EMA. So really nice pop. Yes, we're now in overbought territory, so we do need to be aware of that. But, when you're in a really nice bull market move, you can see that this indicator can stay rather overbought because we are getting great participation. If you're in a nice rally, you would expect the majority and most of the stocks to be above their 20-day EMA. And that's what we're seeing. And that is a good number to support a continuation of the rally. Additionally, this was one of the things I pointed out specifically in our weekly wrap on Thursday. And that was that we got a nice little increase here on percent PMOs rising. So of course the PMO is our momentum indicator. And so we got a little bump. Now the number is only 59%, but that is good because we're making this move and it leaves plenty of room. There's room for improvement right now in the S&P. So that tells you that we don't have an overbought reading. We actually have a reading that supports higher prices. All right, let's switch gears. So obviously I'm bullish on the market right now, and I think some people are going to want to mark their calendar because DecisionPoint is known for being bearish. But when you see those types of indicators, there's really nothing you can do except be bullish. All right, crude oil. This has been interesting, has it not? A lot of volatility over the Suez Canal problem that's been going on. We're also just seeing a really strong rally to the upside that really needed to be relieved. And so that's what we're seeing. And then we've got the volatility. There are two things going on here. Okay, number one is the squeeze that is going on with price between the 20 and the 50-day EMAs. The other is what I'm seeing as it's a little bit on the complex side, as we call them, but I'm seeing a head. Yes, it's two little tops, but think of this, step back a little. We have a head right here, and we have a left shoulder right here, and it's messy, but we have a right shoulder there as well. And when you draw the confirmation line, it's a little bit sloped downward, but honestly, that would put the confirmation line right about down here on this support level or a little lower, which would put it right on that 200-day EMA. I am expecting to see a breakdown, honestly, in oil prices, not to fulfill this giant head and shoulders, but I think that, with the squeeze that's going on, I think ultimately, just because of this topping formation, that it's going to end in a breakdown. But that 200-day EMA is right there. Currently, the PMO is still in positive territory. But my concern is that we will get that breakdown. I don't think that crude oil, or a lot of the energy-related stocks to oil are maybe the best place, especially when we're seeing this amazing pop going on in the market in general and technology. Let's look very quickly at gold. I wrote a Chart Watchers article on it. It is free, and you will find it on StockCharts.com under the articles tab. Or if you got it in the mail, you should sign up for the Chart Watchers newsletter that you can get every week on email. Anyway, here we go. We had a reverse flag going on with gold, and now we have a double bottom. Gold has been really not doing what it's supposed to, and I was hoping to see before the show a nice breakout above that 20-day EMA, and we still are struggling with that 20-day EMA. Reverse flag is bearish, but I'm seeing this double bottom forming, which is a bullish pattern. You've got the PMO that is turned up above its signal line. So I am expecting more upside for gold. I just would have liked to have had a little bit more confirmation before I came on the air with you today. The discounts are rising. They haven't gotten completely overbought yet, but you can see typically when the discounts on the Sprott Physical Gold Trust get elevated, that usually leads to a bit of a rally. And you can see that's what we had back here coming off this low. And now we're seeing them increase again, which is good because that tells you that there's still bearish sentiment going on under the surface for gold. Bearish sentiment is bullish. Okay, well, that leads me to the diamond of the week. And if you watched the show for Chartwise Women on StockCharts TV, you'll know that Mary Ellen McGonigal and myself had already mentioned the President Biden plan and all of the stocks that would probably get some love. So I was very, actually not so surprised when I ran my diamond scan this morning. And the number one thing on my scan was the Global X Autonomous and Electric Vehicles ETF. I think it looks great. And it's going to be getting a lot of love, this industry. And so seeing this double bottom, seeing this RSI just moving positive, and you've got an OBV that is confirming the rising bottoms here on price. So that's a nice confirmation. Or if we were looking at a line chart, I suspect we might have declining bottoms there. So that would be a positive divergence. You have a scooter here telling you that the StockCharts technical rank for this ETF is among the top, well, 6%, top 5% of all ETFs. And that's what that scooter is telling you. Everything looks great. If we're going to get the breakout here from this double bottom, the upside target, the minimum upside target is $31. I mean, look at this great PMO turning up right above the zero line. These are all the things that I look for when it's time to purchase. All right, that does it for your Daily 5. I want to thank everybody for watching. Again, my name is Erin Swenlin from DecisionPoint.com. Come check out our products over there. If you like the diamonds I present on your Daily 5, then you will love the Decision Point Diamonds Report. So come check us out and happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.